Thank you for tuning in. You're watching The Property Guide on ET Now. After a hectic week of lobbying and closed-door negotiations, we now have a brand new cabinet to assist our brand new Prime Minister. What will this mean for our real estate sector? We're going to talk about all of that, and we're going to tell you whether you should be buying or selling or waiting in this market. First, remember, if you have any feedback or questions about buying a home, write to me. Email ID is at the bottom of your screen. You can also reach me on Twitter. Joining us in the studio today, Pranay Vakil, Chairman of Paron Consultancy, Gulam Zia, Executive Director at Knight Frank India, and Jayashree Kurup, Head of Content and Research at magicbricks.com. We want to talk about this new cabinet that we have. There's one theory, of course, Pranay, that with new infrastructure, with new supply, that this new government is going to bring in, they'll clear up the bottlenecks. New supply will mean prices will come down, people will be able to afford homes. Do you actually believe that is a possibility?
Well, I would say that break it down into short term, medium term, and long term. In the short term, you can't really create infrastructure overnight. Yes, all the bottlenecks are there, they can be cleared. All the approvals which are awaited can be kind of given, so that things come back on stream and deliver in about 2 to 3 years' time. So that's a medium term that. In the short run, if you really want to have an impact, reduce the interest rate. That's something which you can do immediately, and even a 0.5% or a 50 basis point reduction in the interest rate will show a huge amount of improvement in the volumes. And I think we should
So that's a job for the RBI then, it's not the job for the new Prime Minister.
That's right, but as long as the Prime Minister is able to say that I'll control the inflation, you reduce the interest, I think they'll be working in cohesion. And I think that can really work. If you want an immediate result, I think this is something which you can immediately do. Secondly, if you give clearance to all the pending projects, sentiments will improve, And at least people who are sitting on the fence today, not taking decision, will come out and take a decision to buy. Remember this, that volumes are a precursor to the prices.
Right.
If you have better volumes, then you can even think of increasing the price. But if you don't have volumes, which you have today, and which you had for the last 2 years, you can't even think in terms of increasing the price, although the input costs have gone up substantially.
Gulam, let's talk about sentiment. Tell me what volumes have been like in your experience over the last couple of weeks since we've seen this overnight change of sentiment. And you have a sentiment index in-house as well that said that sentiment has gone up 20%. Is that right?
That's correct. That's correct. Sentiments do impact, for sure, real estate and especially housing. Essentially has huge role of sentiments in it. And sentiments, what better way of demonstrating your improved sentiments with a very stable government in saddle? And that's what we have seen with the last 10-15 days, whatever we have seen, sentiments have improved a lot. But as Pranay Bhai was mentioning, the impact of sentiment, first of all, is felt only on housing, not on the other sectors of reality, whether it is office or hospitality, etc. And the other is that the impact of this sentimental change is not long lasting. So perhaps a couple of months, and then the reality sinks in, whether it is the pace of working of the government or their policies, etc., then decide whether this short blip would last long, or there'll be many more impacts coming in from, say, infrastructure, policy rates, economic growth, etc., etc. But having said that, one thing which is interesting that we are noticing is that, well, even before the new Prime Minister was coming in, we saw rupee strengthening. And strengthening of rupee has a drastic impact, very bad impact on ITITS. And that ITITS so far has been contributing to about 70% of office markets. So if this angle continues, if you have rupee strengthening further, then your exports and ITITS will have a severe impact. And then office market will still not see the light of the day for a couple of more years to come.
For a few more years to come.
Possibly, yes.
Well, Jayashree, I want to bring you in here. Now, we heard from a source from the BJP in one of the newspaper reports that they expect the new Prime Minister to announce a massive housing program before the 15th of August, including the city of Mumbai. What are your expectations from this government in the area of real estate right now?
One of the early leads that we got is that the Narendra Modi government is planning to use the 75th year of Indian independence as their go-to target, and they're trying to evolve a policy that will give a house to every family by 2022, which is a very, very ambitious policy, and they're talking about both rural as well as urban housing. So you're talking about roughly 20 million urban housing and 40 million rural housing. That's very, very broad estimates. How do they get there? I think one of the biggest things is that today in urban India, the crisis is of sentiment, not really so much about finance. The developers are strapped for finance, but the consumer, even today, can actually enter the house buying cycle because the consumer has been saving up for it. Our last sentiment index showed, the last quarter showed that there was the sentiments had improved significantly in the last quarter, and we expect that if we are already doing the next sentiment index, and we feel that this is going to show that there is significantly positive sentiment across the country.
Brian, I want to bring you in on this idea of a home for every family, which is a wonderful idea. But if we look at our urban centers right now, yes, what Jayashree said, one of the problems is the bottlenecks of finances for developers, space, supply, just land in a city like Mumbai, for example. What sort of solutions do you think this government is going to need to look for in order to make that happen?
I think it calls for, to my mind, an out-of-box thinking. What I mean thereby is that do you have to really limit to the boundary of Mumbai, or can you really go somewhere else? Develop a twin city to Mumbai, like Hyderabad, Secunderabad, or, If you're talking of Mumbai, it has the limitation. It's a peninsula surrounded by, so you can't really go. Can you build a bridge? If you have the Trans-Harbour Bridge, it will open up an area 4 times the size of Mumbai, okay? And it is more or less vacant. What I really mean by affordable housing is the sub-10 lakh housing. I think there has been a lot of confusion about what the affordability should be. People are talking of 25, 35, 50, But I really feel that if you really want to address this issue, you have to create housing, maybe of 300 square feet, maybe of 400 square feet, but in the sub 10 lakh range. And then you'll be able to really meet those goals which you have set for yourself, 24 million houses and whatever it is.
Ghulam, let's talk to those fence sitters who are now opening up their wallets. There are 2 types, obviously, those that are actually buying homes to live in, who have been looking for this opportunity, and those who are investing. I want to talk to the investors first. What is your advice to someone who maybe pulls some money, some profits off the stock market at this point, is looking for an investment in real estate? Which city would you ask him to focus on? What bracket should we be looking at? What do you think is the most promising market right now in the country?
Well, if it is a purely investment angle, then you have to look at where you can, make your money double up or multiply as soon as possible. And that can only happen in places where the infrastructure is crumbling. So what else but Bombay? So if you're talking about, say for that matter, say a city like Ahmedabad or Hyderabad, these are places where road infrastructure, the primary, secondary, tertiary, I don't know how many ring roads are existing and so on and so forth. So travel distance from point A to point B is about 20-25 minutes max. These are the cities where prices are not to grow in short term at least. I would say 5, 7 years, 8 years. Not much of an expectation I would have, because the economic drivers are not going to overnight change. So in that case, whether we're talking about city like Bombay or Delhi, I think the choices end there.
But very quickly, before we go into break, I want to know what your favorite resi market is right now for the quickest growth in the country.
Well, I would still say Mumbai.
Mumbai.
And I would say the western side of Mumbai more than the eastern side of Mumbai. Even if you're going on to the western side, the western side of the western side is what I would really bet on, because that's where maximum appreciation has taken place. Keeping in mind the infrastructure connectivity. If you're on the Western Express Highway, for example, I think it's the best thing, because you are able to get along.
All right, so Mumbai is the hottest market. Keep an eye on where the infrastructure is going. We're going to take a very quick break. Welcome back. You're watching the Property Guide in ET Now. Thank you for staying with us. All of our guests are still with us, helping us make smart decisions when it comes to investing in property. Remember, we were talking about the election impact on the realty sector, and one of those impacts are full-page advertisements for property that are back in the market. Very interesting offers from the market. Purvankara in Bangalore offering loans at 6.99%. So basically, if you get your loan at 10.5%, they will reimburse the difference. That's one offer. There's an offer from a company called Sri Balaji in Ahmedabad where you buy a flat for 80 lakh rupees. In 28 years, they'll give you 80 lakh back. And of course, there's 2080 products are back again. There are products in Mumbai that are offering discounts at this point. But do you believe that it makes sense to buy something and hope for my money back in 28 years?
Okay. Apart from being a realtor, I'm also a chartered accountant. So I can do a quick calculation. As a developer, if I get 80 lakhs rupees and I keep aside 5 lakhs of rupees, right? That 5 lakhs will become 80 lakhs at least in 28 years.
Okay.
Because even at a very, very low rate of interest, at 7 years, it will double. So 5 becomes 10, becomes 20, 40, and 80. You know, that's the way it will work. So therefore, it's not a big deal, but it's a great marketing gimmick. I think it'll appeal to some people that he'll get his money back after 28 years when possibly he's no more.
Right,
or his
right.
children will get it. But it's a good gimmick, and I think he's overcharging maybe by 5 lakhs, or he's keeping aside 5 lakhs, which will become 80 lakhs at the end of the period.
Just investing on your behalf.
That's right.
Jayashree, I want to ask you about this 6.99% that Purvankara is offering on all of its properties right now. What is your response to this offer? What are you reading into it?
The government is, it is expected that the government will drop the housing finance interest rates very soon. And if you take a housing loan at 10.4% or whatever the current loan rate, interest rate is, they are negotiating with the banks and they're saying that we'll give it to you we'll allow you at 6.99. The market rumor is that it could well come into the 5.75, 8% very soon. So they are actually punting the market, and they're expecting that there will be significant changes in the housing loan interest rates, and whatever they will pay the consumer, if it boosts sales today when they really need the money, they are expecting that this should happen, and that's why they're offering these rates.
All right, Glam, I want to ask you this. You know, when the election results came out, we saw real estate company stocks rally. After a week, they cracked. Came back to where they used to be. So tell me this, when we look at all of these offers right now, Jayashree just telling us it's because developers need to raise money. Things might have changed for the stock market, but they haven't changed for developers right now. What does this mean for the market as it stands at this point? How long do you think it's going to be before any of these measures actually hit? Are we talking 12 months? Are we talking 16 months? We're talking 3 years?
Well, the only way developers will start making money is when consumers start spending, when the volumes start growing. That's the only chance for developers to see the redemption. And that, if you're asking me, may not happen in next 2 to 3 years. It can actually take longer because if you're talking about job creation, if you're talking about economy growing, if you're talking about the results of economic growth trickling down to all strata of society, it's not going to happen in a year or two. So for developers to mop up funds from consumers is going to take longer.
Jayashree, give me a quick checklist for anybody who's looking at taking up one of these offers. What should they check? What should they make sure is part of the contract?
One is that you should be very sure that the fine print, read the fine print. There may be many things in the fine print. It is worthwhile getting it read by a legal expert so that you know exactly what you're going in for. See that the property is not overpriced. Check out the prevailing price rates in the market and benchmark the price that you're getting at, and see that you are not being charged for what is going to be come to you after a few years. The other thing is, see that the developer has his approval. Check the developer's intent, for handing over possession. Buy as far as possible at this stage, buy into properties that are nearing completion, because today you have a lot of stock that is nearing completion. That ensures that your project will actually come into your hands, and you will have something to use while you're buying. Also, don't buy in far-flung areas. Wait for infrastructure to come. Buy where you can, where the usability is high, so that even while you wait for the property prices to go up, you are getting some kind of a rental return, or at least the outflow is managed.
Pranay, I want to ask you this right now. For investors who are looking at real estate, residential, or should they also be considering commercial at this point?
Commercial.
Commercial, really? Because Gulam just told us that if the rupee continues to strengthen, there might be trouble.
Let me tell you, and I'm looking at both kinds of investors. Investors who are high net worth in India, and investors who are bringing dollars from abroad. Why am I saying commercial? Possibly this is the only country where the best commercial you can buy for 25% of best of residential. Mm-hmm. Today the best residential is about 1 lakh rupees per square feet, and the best commercial is 25,000 rupees per square feet. I can't think of any other country which has this kind of a disparity. Now, this is an opportunity where you can buy 1,000 square feet, you can buy 4,000 of commercial. Mm-hmm. Yes, do you have the holding capacity is very important. If you're able to hold on to it for 5 years, I think, and you're able to buy a tenant to deploy that asset, maybe in 6 months, maybe in 8 months, I think it's a worthwhile investment to make.
All right, so if you have questions about investing in commercial property, write to us. Email ID is on your screen. We'll have Pranay come back into the studio and answer those questions for you. But Sudhakar has written to us during the week. He wants to buy an apartment in KR Puram in Bangalore with a budget of 1 crore rupees. He's shortlisted the Pashmina waterfront in KR Puram. He wants to know what the project's credentials are. We know the current price is about 4,900 to 5,800 rupees a square foot. Jayashree, would you give him a go-ahead on that project?
This is a very premium residential property, and the rest of the market is functioning at about 2,700 to 5,500 per square foot in the KR Puram area. This is a very well laid out property, fantastic specifications, and I think, truly it's very close to the Whitefield area. So if somebody wants to invest and this is a project of choice, there's really no harm in buying this project, even though it's slightly priced higher than the rest of the market. I think it is a worthwhile investment.
All right, let's quickly take another question. Khana has written in, wants to buy ready-to-move-in apartment in Pune for end-use, budget 20 lakh rupees. Shortlisted some locations: Fatima Nagar, NIBM Road, Golibar Maidan, Kondwa, Hadapsar. Which of these are a good option? 20 lakh rupees as a budget. Will he be able to afford anything in these neighborhoods, and what would you like him to look at?
Well, I don't think 20 lakh is enough to buy a 600 square foot apartment in either of these locations that we're talking about, because most of these are actually either at early 4,000s or beyond that, rupees a square foot kind of a rate. So then the question is, where else? Where Pune still has few options in that range, especially if you're moving towards this Chakan, Talegaon, Ranjangaon belt, where lots of new residential developments are coming up, or even the far off areas of PCMC, which would perhaps once again be touching the same belt of Talegaon, Chakan belt, etc. The question also, the requirement is for a ready property, and in today's market, ready properties are normally higher than the under development properties, and especially because of some kind of a developer credibility issue, this benefit is existing. Soon it may evaporate, but then a ready property is going for a premium.
So there are options, and of course someone in our team will mail you the checklist that you can use to run a background check on your developer if it's not one of those big national reputed developers. Welcome back. You're watching the Property Guide in ET Now. All three of our guests are still with us, helping us make smart decisions when it comes to buying property. Nikhil has written in, he wants to buy an apartment at ATS Alor, Yamuna Expressway, Noida, with a budget of 70 lakh rupees. He says his investment horizon is 3 to 5 years. Can you advise me on the project's credentials and give me also a few alternate options? Now, that project is currently priced at about 2,800 rupees a square foot. Jayashree, are there better options for him at Yamuna Expressway?
See, Yamuna Expressway is a long-term option, much more than medium. I mean, Noida is an immediate option. Yamuna Expressway is a distant option. But if he's willing to hold his property investment and hold it for 5 years, I don't think there's anything wrong in buying in the Yamuna Expressway. It is a place with great potential. And the developer that he's gone in for ATS is a well-known brand in the market, has a track record of delivery and good quality specs. So there's no harm in investing in this. Having said which, I thought I'd also check out whether he has other options within this budget. And with a budget of about 70 lakh, he should be able to get a 2 BHK, about 1250 square feet in sectors 76, 78, 79. There are options available and it fits his budget. So it's up to him. If he wants to buy somewhere where he can move in immediately or he can get rental return immediately, the Noida sectors are better. If he's investing gradually and wants to invest for the long term, I would say that Yamuna Expressway is not bad at all.
But Pranay, someone like Nikhil Jain, who's obviously a young man, he wants to make a quick investment. He's looking at a 3 to 5 year investment horizon in property. Is that too short of an investment horizon right now? Do you think he might be disappointed? Should he extend the horizon he has?
I think 5 to 7 year horizon is not a bad horizon. 3 years is very short, because if you're reinvesting some capital gains which you have made, you have to hold on for 3 years. So 3 years is just too short. I think it all depends on what kind of borrowing you have done for this, or is it coming out of equity, what kind of repayment you have to make, and over what period of time, and then take that decision. So it depends from individual to individual. It depends on what are the circumstances under which he is
How important is it for him to also consider the costs that will happen when he buys and sells, or when he sells this one and looks at making? So there's brokerage, there's stamp duty, there's registration, there's all of these other things.
This is very important. Also, what is important is your ability to exit. Because in property, you can't always exit at will. You have to look for the right opportunity, find the right customer, the pricing has to be right, only then you can exit. Having said this, yes, you must build in a minimum of 10% as the exit cost between stamp duty, the brokerage you might have to pay, the registration, and whatever other expenses there are. In addition to this, maintaining that property for that 5 or 7 year period is also going to cost you some money. It will differ from project to project, but it could be anywhere from 3 to 5% of the cost of the property.
All right, so always remember that a real estate investment is a high maintenance investment. You have to be prepared for that. Raj Agarwal has written in, he wants to invest in a 3-bedroom apartment in Oris Serenity in Mallya in Mumbai with a budget of 3 crore rupees over a 3-year period. Please give me the project's credentials. Now that project is being priced at about 12,500 rupees a square foot. Gulam, for Mallya, is that a good price?
Well, it's a decent price. It's a decent price because there are products which are costlier than that also in that market. And especially because as we were discussing earlier, Pranay mentioned that the west of the western suburbs is always his favorite. And this is actually that area that we're talking about, the west of western suburbs. So there are quite a few of very reputed, good developers who have done fantastic projects, right from Kalpataru to Rustamji and all the Raheja brothers, etc., are all there in this market over a period of time. In last, I would say 2 decades, everybody worth his salt has entered this market. And then there are also reasons because, as I mentioned earlier, there are a couple of these east-west corridors, whether it is Jogeshwari-Vikhroli Link Road or Goregaon-Mulund Link Road, will have a direct impact on this area. And mind you, the coastal road that we are talking about is already taking some shape, like the one from Warsaw to Mud, the approvals are already in place. So I would say this is a great location. We must look at investing there.
All right, it's a great location. Now, unfortunately, I've completely run out of time on this show. Gentlemen, thank you so much for joining us. Jayashree, it's always a pleasure to have you on this show. Thank you so much for coming into our Delhi studio. If you have questions for any of them, write to us. Email ID is at the bottom of your screen. You can reach me personally on Twitter as well. Thanks so much for watching.